Welcome back to Alpha Recap, your quick, no-nonsense wrap of today's markets. We're recording after the bell, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets close with a clear risk-on tone, and we've got a lot to unpack from a tech-led rally that pulled in a surprising amount of breadth.
So what really stands out here is how the tech-heavy stuff outpaced the broader market. The S&P 500 ETF finished up about 1.4%, the Nasdaq-100 ETF jumped about 2%, and the Russell 2000 ETF advanced about 1.5%.
Right. That trio tells the story. When the Nasdaq-100 outpaces the S&P, but small caps also finish positive, you get a mix of concentrated leadership and genuine participation underneath the surface.
Let's break down why. In plain terms, there were four big drivers. Better than expected earnings and bullish guidance, a semiconductor bounce tied to data center and AI optimism, deal flow around AI and cloud, and a rotation that broadened market participation beyond just the biggest names.
I mean, when you step back and look at this, earnings and guidance were the ignition. Disney reported a beat on non-GAAP earnings per share. Restaurant brands and a handful of others were mixed, but manageable. And Uber raised bookings guidance. That one sparked a double-digit intraday pop.
And the Uber move was meaningful. The company jumped roughly 8 to 10% after guidance. Traders interpreted that as a sign travel and advertising momentum are coming through, which helped consumer-facing internet names broadly.
Exactly. Then you add semiconductors. Advanced micro devices surged about 20% after headlines tied the company to ongoing data center growth, and Intel rallied roughly 13% on strong trading action. Those moves injected life into chip stocks and pushed the Nasdaq-100 higher.
So what really stands out here is how closely chip demand is being linked to AI and cloud capex. More spending on AI infrastructure translates into more servers, more processors, and that feeds through to semiconductor revenue expectations.
Right. And the other thing is deal flow. We saw NVIDIA-related partnerships and other AI supply chain headlines in the communications and media wrap. Add in institutional wins in crypto infrastructure and some big energy project announcements, and you've got a risk-on drumbeat across several pockets of the market.
Big move.
Not what anyone expected.
Let's walk sectors. Technology and semiconductors were the clear standouts. Advanced micro devices and Intel led the charge. Communication services had a mixed session. Some companies did well on deal news, while others, like Warner Bros. Discovery, lagged on company-specific issues.
Yeah, that tracks. Consumer discretionary and internet names benefited from the Uber surprise and solid trends in bookings and ad revenue. Financials were relatively stable, though headlines around food inflation and a security breach at a payments-related fintech raised some caution flags for specific names.
Energy was more stock-specific, but got a lift from project news. Think Fujairah and ADNOC headlines. And crypto infrastructure names received a boost from reports of institutional flows. Utilities and real estate were quieter in a classic risk-on session.
Let's give listeners the quick how it works on semiconductors. Data centers need more compute for AI models. Cloud providers allocate capital to expand capacity. Chip makers win design wins and supply contracts. And that expectation of higher future revenue flows through to those stocks today. It's a chain reaction, simple in concept, complicated in the numbers.
Honestly, I was a bit surprised by this one. Advanced micro devices move of about 20% shows how sensitive these names are to any positive data center commentary. Intel's near 13% jump also suggests money managers rotated into value turnaround stories that look set to benefit from the same thematic tailwinds.
On the media front, Disney's non-GAAP earnings per share beat helped lift streaming and content stocks. Analysts continue to watch streaming monetization and the cadence of new content as key valuation drivers. Conversely, Warner Bros. Discovery reminded the market that restructuring and content issues can keep pressure on specific names.
Quick aside, we saw implied volatility ease intraday as traders chased the rally. That's the options market saying, for now, we expect calmer waters. though high-impact earnings and macro prints could bring volatility back quickly.
On macro and Fed implications, there wasn't a single dominating macro headline today, but several cross-currents mattered. Food inflation and other sticky components keep inflation risk on the radar. The market's risk-on tone suggested investors were comfortable with current rates for the moment, but sticky inflation could limit how dovish the Federal Reserve becomes.
I mean, when you step back and look at this, the rally shows investors were prioritizing earnings momentum and end market demand over an expectation of immediate rate cuts. That doesn't mean rates are off the table. Fixed income moves and any Fed comments will quickly shift the narrative if inflation reaccelerates or the labor market heats up.
And financial stability is still on the list. The payment security breach that popped up in the finance wrap was a reminder that operational and cybersecurity risk can affect confidence in specific financial names and, by extension, credit flows.
Short pause.
For traders and watchers, a few technical and structure notes. Breadth improved compared with some recent narrow rallies. That's encouraging. But implied volatility could spike again as big earnings and macro releases roll through. Traders will be watching whether breadth keeps expanding or whether we reconcentrate in a handful of tech leaders.
So, what really stands out here is the watch list for the next sessions. Continuing earnings cadence and, importantly, guidance and margin commentary, Fed speakers and fresh inflation or employment prints, semiconductor and AI supply chain updates, and crypto institutional flows that have been providing incremental risk-on impulses.
Right. Guidance will likely matter more than headline beats. Companies can beat this quarter and still worry markets if their forward commentary suggests demand softness or margin squeeze. Analysts note that guidance is often the clearest signal about whether today's optimism is durable.
Notable movers, in plain English. Advanced micro devices surged about 20% after data center commentary. Intel rallied roughly 13% as traders repositioned into value and turnaround stories. Uber jumped about 8 to 10% after raising bookings guidance. Disney beat on non-GAAP earnings per share and helped media names. And Warner Bros. Discovery was a laggard on idiosyncratic pressures.
And some quick caveats. Valuation sensitivity is real. Many growth names trade at elevated multiples that could compress if the rate outlook turns hawkish. Event risk, earnings misses, regulation in tech and crypto, or geopolitical shocks could reverse sentiment quickly. Analysts stress these are material downside risks to keep in mind.
So, what really stands out here is that today felt textbook. Earnings and guidance sparked a risk-on move led by semiconductors and big tech, with small caps participating. Whether this becomes a trend depends on upcoming earnings, the Fed, and whether breadth keeps widening.
Final 3 takeaways for listeners. 1. The market closed up on a tech-led, earnings-driven rally, with healthier breadth than some recent sessions. 2. Chip names and AI-related supply chain news were the primary catalysts. Watch CapEx and cloud spending updates. 3. Macro data and Fed commentary remain key risk factors that could quickly change the tape.
If you want to revisit any specific company or piece of data we mentioned, remember we're informational only. This is market analysis, not personalized investment advice. Analysts note market conditions and data. Reach out to a licensed professional if you need tailored guidance.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with another recap. Stay curious and keep the questions coming at stockalpha.ai.